Hi, everyone. My name is Fikr Taddasa. I'm the Regional Director for the Partnerships for Forests program in East Africa, based in Nairobi, Kenya. My background over the past decade, I have led multiple nature positive incubators with the aim of mobilizing investment into nature positive business models across Africa.
Hello everyone, I am Flo Brigo. I am an investment officer at FMO. I work in the private equity department in the team that invests specifically in agribusiness, food and forestry. So one of our key focus deployment is Mobilising Finance for Forests, which is the source of funding that I will be speaking about at the conference. My background is in private equity and corporate finance in Africa, and I have been investing across FMO's focus sectors, but with a special focus on forestry for the past year.
So my name is Martin Halley. I work for the UN Environment Programme. I've been working in sustainable finance for nearly 15 years now, and now have the pleasure of managing the Restoration Seed Capital Facility, support facility aiming at accelerating investment in activities that contribute to forest restoration and protection.
Nature positive growth is a major investment opportunity in Africa because the continent combines really high value natural assets, rapidly expanding markets, and this is complemented by a growing global demand for sustainable products. Yet the sector still faces a significant shortage of investable forest positive businesses. And these forests, Africa's tropical forest landscapes, they offer really strong commercial potential from sustainable commodities like cocoa, timber, bamboo, cashews, to more nascent but fast-growing markets for non-timber forest products. And these tropical forests, in addition to possessing significant commercial value, they also support climate resilience and community livelihoods. But despite this potential, the sector faces persistent financing gaps and, more importantly, a lack of early stage investment. And what this means practically is that many promising business models are not reaching scale. Partnerships for Forests sees nature positive growth as an investment opportunity because sustainable businesses can generate real economic value while protecting and regenerating tropical forests. And this creates new value chains around standing forests, restores degraded land, and creates an opportunity for regenerative production. Our work has already shown that these models attract significant private capital. We have mobilized over 1.3 billion in investment to date and can deliver strong returns for investors, communities, and landscapes. And so we believe that nature positive growth is not just an environmental priority or imperative, but it's also a long-term commercial opportunity for investors looking to enter African markets and diversify portfolios with regenerative and really future-proof value chains.
Yes, I fully agree with everything that you said, and I think there is a need for capital across the nature value chain for companies at various stages, from innovative business models seeking to prove a concept to established businesses needing to scale in order to expand the boundaries of productivity. And these companies are looking for aligned investors to enable them to generate sustainable and durable wealth while enhancing and protecting critical natural ecosystems, and especially tropical forests, from degradation. For investors, this is an opportunity to unlock growth beyond the continent's underlying economic and demographic trends, but also through value-adding activities, bringing these businesses into international markets that also were mentioned by Faker, but in terms of all of the products that can be made through the value chain.
I mean, I think this session is really going to be a fascinating one. It's bringing together 3 programs that are dedicated to boosting private sector activity and investment in forest restoration and protection across Africa and the rest of the tropical belt. I think together the three programs cover the full spectrum, from enterprise support all the way to multi-million-dollar investments in the sector. And so the session will really be providing practical insights into the investable pipeline in the sector, as well as practical information on types of support and de-risking mechanisms that are available to companies and investors in the sector and in the region. From my side, the Restoration Seed Capital Facility is really there to accelerate private investment into the activities that contribute to forest restoration and protection, specifically by overcoming bottlenecks that are currently slowing down private investment in the sector. We provide support to fund managers who are currently seeking to bring new investment vehicles to the market. This is still a very complicated phase due to high risk perception in the sector generally, and with respect to some of the geographies that we cover, notably Africa. Due to that risk perception, the time and resources required to bring new investment vehicles to market are often considerable, and our program offers support to investment managers and fund managers who are going through that. We also offer support to fund managers and project developers who are currently building the investable pipeline. And here again, there's considerable work that needs to be done in the early stages to develop what are early stage investment opportunities into full maturity, up to the point where an investment decision can be made, taking a lot of time and resources. And once again, the Restoration Seed Capital Facility offers support to meet that need. And that support really comes in the form of very practical cost sharing at the level of fund managers and project developers. Through all of this support, we help accelerating and de-risking investment that is crucial for the sector and crucial for investment in Africa.
So Partnerships for Forests is tackling a fundamental market failure. There is strong demand for sustainable forest positive products, but like I mentioned earlier, too few investable businesses and enabling conditions to attract capital at scale. And because of this constraint, high potential solutions struggle to grow because early stage businesses or enterprises lack finance, they lack market access, technical support, and enabling policies, leaving a large gap between commercial investor expectations and what a pipeline of local businesses can currently offer. So to solve this, P4F mobilizes investment by building the foundations of a healthy forest positive economy, working on both the pipeline and the enabling environment. So our model, the first piece is around incubating forest friendly businesses. So we develop early stage enterprises that create economic value while at the same time protecting and regenerating forests. And a few examples of value chains that we've worked on are sustainable coffee, cocoa, timber, non-timber forest products, and what we call restorative value chains or business models. And these models enhance the value of the standing forests. They create new supply chains, and they generate significant income for communities. We also work on addressing barriers that block investment into the sector. So we work directly on tackling issues such as access to markets by engaging with the off-takers. We work on smoothing out supply chain inefficiencies and all other barriers that limit capital flow into African forest landscapes. And finally, we also work on creating the enabling conditions that investors need. So we support policy reforms, we help strengthen sustainable trade systems, and we also help improve market demand for responsibly sourced products. So these three programs together, P4F, RSCF, and MFF, they form a capital continuum that helps forest businesses in Africa move from idea to incubation to early investment and finally to commercial scale. Each of them address different barriers along the investment journey. So for us, for Partnerships for Forests, we build and strengthen the pipeline. So we work on early stage incubation as well as creating an enabling environment for investment. We also address the foundational problem, which is there are too few investment-ready forest-positive businesses in tropical forest landscapes. And so through our incubation, we help strengthen and scale these early-stage businesses. And we complement the other two programs by incubating forest-friendly business models through grants and technical assistance. We build enabling conditions like policy reforms, market access, sustainable supply chain development, and also strengthening local support ecosystems. And finally, we help reduce risks upstream so that later stage facilities like RSCF and MFF have stronger vetted pipelines to invest in.
I think the three programs that we'll be presenting together at this session are incredibly complementary. The Partnership for Forests is a broad support program that really helps to develop the opportunities from the ground up. The Restoration Seed Capital Facility really works with those actors that are pooling together investment and bringing it to deploy in the sector and helping them overcome the barriers specific to that program. And then that is complemented very well by the Mobilising Finance for Forest program, which is bringing capital to the sector directly. So I think through the three programs, you really get a full spectrum of support and investment into the sector from the early stages all the way to investment, and counting also the enabling environment which Partnership for Forests supports.
So Mobilising Finance for Forests offers a uniquely flexible model combining three types of concessional capital, all directed at private sector investment. The first one is equity and concessional debt, which are used to de-risk sustainable land use investment and mobilize private finance in tropical forest regions through products such as first loss cover or debt guarantees. The second one is development contributions, which are repayable grants provided to early stage projects that are not yet sizable enough for an MFF investment, but in order to support them becoming investable in the medium term. And the third one is technical assistance, which provides non-repayable grants for advisory services and learning and convening activities, helping companies address a wide spectrum of needs from ESG performance and impact measurement to business model innovation and operational improvement. The three types of capital that MFF provides can be layered within the same investment, either simultaneously or sequentially, allowing the capital to evolve with project maturity and risk profile, but especially adapting to the needs and appetite of the broader investor landscape, aiming to catalyze the maximum amount of private investment into the sector.